following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this first day of July, and we've wrapped up June. In a moment, we'll look at the weekly charts of the different indices. First of all, let me just wish everyone, I'm liable to run out of time or forget to say it before the end of the show. Have a wonderful 4th, everyone, and just a real great weekend. We've started off with some beautiful weather here in the Boston area, so we'll see how that pans out. And a couple of things I wanted to do yesterday. I'm going to do it right now. You know, I listen to as much as I can. I'm busy doing work or whatever it is, already preparing the next day's newsletter, doing research, doing trading, whatever it is during the day. When I'm not doing the show or after I've done my morning call, which is my Traders Corner, comes out at 8:35 Eastern Time. It's the final chart every day, except on those very rare occasions we have an update. But I think that Tom has really built a wonderful venue for people to come to. And I mean, think of it this way. I mean, most of it is free, except if you want specifics. And then, of course, you get a newsletter. But, just starting, look, we've got John Logan. John's produced the most amazing software program with different levels of support and resistance. Just as a great analysis, it looks at all these different instruments around the world. It's fantastic to start off the day like that. Then comes Larry Pesavento. Larry is an expert at Gartley and butterfly patterns, and boy, has he made some fantastic calls. And just a tremendous experience right there. And then, of course, Tom and Tommy, Tom's son has just picked up. Actually, I must say, I'm looking at it because I've known Tom since I joined TFNN from way back, 2002, 2003. So Tommy's growth, I knew him as Ed, but it's Tommy, Tommy Jr., has grown exponentially in a very different way because he comes from it with almost like a mathematical background, and he's always asking the question, why? So it's really been a learning experience for me to watch Tommy's learning experience himself. And of course, Tom O'Brien. Tom is the, I would say that Tom is probably the most influential opportunist that I know. Opportunist in a good way, meaning you take advantage of whatever you can. And I mean, look at all the different business and the ventures that he's gone into, and his experience and the way he uses volume. There's just so many learning techniques that you can get. And then, of course, I come in, I've had decades worth of experience. I'm showing you right now, this is the 10-minute chart. There's a technique that I use called the Chapman wave propeller shaft. You don't often hear that. It's where there's been a very sharp move to the upside. I'm not necessarily counting peaks or troughs. I'm just saying sharp move to it's almost like the Chapman wave stork leg formation, has the same connotation, except there's one big difference. This one implies that you're going to make a potential one-to-one extension, like a propeller shaft. So this is the fulcrum that the propeller, the blades swing around, and it makes a move to the upside, and it makes a move to the downside. I'm taking it from the Chapman wave instant restart low in the E-mini at 11:30 on the 30th at 2071. It runs up to 2091 peak E, goes sideways for quite a while because that was at, what was that? Was it 5 o'clock? That was at 4 o'clock on the 30th. That's yesterday. And this morning we're down to a low of 2081.50. That's at 10 to 4. And now we've just made the one-to-one extension, gone to a peak ABC. What do you look for in the Chapman wave? Always a leg D. And we get the D. And that D is almost perfect. I mean, put the line there. I would say it's within 25 cents of the one-to-one extension. So this says that you can now get some kind of a pullback, some kind of a consolidation, all right? So that's just a technique of mine. There's a myriad of techniques that we talk about. I'll talk about, if I can find one, the Chapman wave, the Eiffel Tower straight up, straight down. We've just had an inverted Eiffel Tower, in fact, the V-shaped pattern. We'll talk about that as we move along. And then, of course, you've got thinkers from these guys with the options, positions, etc. It is a fantastic show, it really is. And then, of course, you've got Steve Rhodes. Steve Rhodes has just been building and building techniques based on other people's techniques and puts it together for his own techniques. Just a wealth of techniques that he demonstrates live. So that's Steve Rhodes. Great call, Steve, of course, on the low that we just recently made. And then we've got Dave White. And Dave, of course, is our technical guru, but he's also really a specialist in looking at where there are levels that you can short or go long, or in fact, what he does is use options, and he's done it fantastic. He's shown us time and again with his market vector, with the weighting that he uses for gauging pricing on the up move or down move. And then again, you've got Andy Heck, just a wealth of information in terms of all those instruments that we listen to and we hear about, pork bellies and all that stuff in the commodity sector. He makes sense of it. He teaches us how to think of it, how to think of these commodities as real living items that affect us daily. So just tremendous. And of course, Daryl Martin. If you look at Daryl's charts, the way every time I see his charts, he's started to hone in on a particular purely technical foundation and to refine it, to be able to give price points of resistance at certain overbought or oversold levels, using the different tracks that you can follow. And I love to see that. So I don't think I've forgotten anyone, because that's a full house. Who am I? Oh, then, of course, you've got Nico and Paige. I listen to them all the time, and I say to myself, oh, I'm doing so many things wrong. But they're absolutely correct. They really hone in on very specific things in health that are very important. So, all right, I wanted to just say thank you. That's thank you, America. Thank you, Tom and Brian. Thank you all, and thank you for listening to the show. So let's get on with the show. The Dow's up 49 at 17,979. The S&P's up 7 at 2105. The Comp Index, that's the Nasdaq, the very broad Nasdaq, is up 30 at 4872. You've got gold now. Where is gold? Earlier on, it was up. It's up 2 at. Oops, sorry. Gold, I lost it. Gold is up 17 at 1338. I thought something had happened there. Let me just look at the chart to see I'm getting that correct. Yeah, very nice move. Gold up 17 at 1337. I'll go through all the weekly charts in a moment. Let's just finish this up. Silver is also up, I believe. Silver is up 7.75 at 2097. What a big move in silver. Look at this. Wow, that's just taken off. Whoosh, look at that leg D. There are so many leg Ds in different charts. It doesn't have to be silver. It's all over the show. Just a stupendous spiral to the upside. So I think we're getting a little toppy in many areas. But in the meantime, back at the range, this is very good. Oh, I forgot to mention, if you don't mind, I'm just going to go back to the E-mini. The E-mini right there is in leg D. That reminded me. Oh, here's a chart pattern that we need to look at. You know what? I'm not going to rush through this. The dollar is down about 40 cents. Crude oil, it was, when I looked at it last, crude oil had been, I think it was up just a little bit, and bonds are up over a point. I'll have to talk about that when we get back. This is a Friday, and we're just going to kind of wrap up. This is the beginning of the week. It's the beginning of a new month. End of the week, end of the month was yesterday. We'll be back.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. I meant to do this. In fact, I was going to do it yesterday, and I forgot today. When I was talking about Tom O'Brien, Sr., what I really meant to talk about was the fact that he's been insistent since January, since actually maybe December, January. Gold, 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 he's been saying. And 100% correct. Bravo on that, for sure. That's a great call. The other question I had in the den was the IYR, which is the real estate REIT, iShares. Yeah, this leg D in the weekly is very strong at 82.20. It says 79 to 78 should be really good support on any pullback. But I don't think this is recycled. I'm calling it leg D in the daily chart as well. So let's go to Ben, waiting patiently in Tallahassee, Florida. Let's go, Ben. You wanted to look at?
Hey, Basil, how you doing?
I'm doing well, thank you.
Great. Wanted to get your take again on gaps.
Yes.
So I'm looking at, what is that, the 620.
You're looking at the gap down and the gap down and the gap up in the SPY?
Correct.
Okay, and this is very unusual because you can go through these charts over and over and over, and you will see that indexes themselves always take the previous day's high or low as a starting point for the next day. So you hardly ever see gaps. But in the indices that are being tracked by a vehicle like an ETF, the SPY, the diamonds, the QQQs, there you can see the gaps. And that's a much better picture because it tells you of the actual trading parameters between 9:30 and 4 o'clock that day. So, yes, the question is...
if I go back 6 months on the daily...
Okay.
I'm looking at the only time a gap wasn't filled was back on 212. Is that what you... Or no, I'm sorry, 216. Is that...
I didn't even have to look. I just knew exactly that you'd be looking at that big takeoff day from the 12th of February when there was a gap down the previous day.
Well, there's a lot of similarities, it looks like, and I guess the question I've got is, what's your take on gaps getting filled, and do you see that 216 at some point? I mean, based on how you assess gaps, do you feel that would have to get filled at some point? And so, how do you apply that to this most recent gap?
Okay, let me do this. There are I bet if you went on the web and you spoke about gaps in stock market charts, you'd get pages and pages and pages. I'm going to make it as simple as I can. I like to try to make it as clear, technically, picturesquely. In other words, I want you to be able to visualize it. There are just a bunch of things that make it real simple. And I'll say it right now that gaps at the bottom can take anything from a day or one bar to years or even decades to be filled. Okay, so that I've got out the way. On the way up, gaps that have pulled back from a high, obviously they don't need to be filled ever, because you could have a stock that gaps up and that could be the high of its lifetime and it doesn't have to go higher. And then it means that the possibility of going to zero, while it's very, very, very small, that's the way you would look at it, that the stock's going to go broke or something like that. So I'm going to make it real simple. Here we go. First of all, the gap, I've looked at this gap, a number of these gaps. These particular gaps from February, most of them got filled in. If you look at the high was 184.10 in the SPY on the 11th of February, so 184.10. The very next day, the low was 183.96, so 5 cents and it was filled in.
Correct.
Now, let's just imagine for a moment that that was a gap that wasn't filled in. If I had to go, I don't know if I'm going to be able to do it here. Let me just go back. Yes, there it is. That's exactly the gap I was looking for. Back in October of 2014, on the 14th of October, the SPY went to 187.04, closed at 187.70, just off the low, and the high was 189.82. But the very next day, there was a candle that had a lower high and a higher low that's called an inside day, and then boom, it gapped up, and that gap from the 16th high of 187.58 to the 17th of 187.62, that 4 cent gap has never been filled in. So now let me go back to what I wanted to say before. I wanted to make it clear. Let me just double check this. There's another one back on the June the 5th of 2012. There's actually an island reversal. If you have a look at that whole spectrum of the low, the 4th of June 2012, the 3 days before and the 3 days after the low, you'll see there's a gap, and that's down at 126, and that's never been filled. So now let me go through. If you're using gaps for information, treat a gap just about as important as if it was a moving average, as if it was, in other words, it is a moment in time that gives you a specific reading, and the only implication is that if the price is coming back to it, it becomes important. So, let me just say that again.
Well, so maybe a better, and I'm sorry, Basil, to interrupt, but maybe a better question is, do you have any strong like math reason or any other reason why the theory is that gaps need to get filled? I'm
going to come to that right now.
Oh, okay.
So what I wanted to say is that gaps at what only in history you can look back and say that's a gap, historical gap, because it was an outlier event at a turning point. That's really the most important thing. In other words, if you're getting a major signal that says we're about to make a dynamic turn that is going to change the trend from one direction to the other direction, the gap either up or the gap down, they usually gaps up from a low. That doesn't have to be even looked at for a long time. So let me make that clear. You're coming off what was a major low. You made a high back in the 3rd of November at 211.66 in the SPY, a peak E. You came down, you double topped to 211, round number high. You came back down, you ran all the way to 181.02. That was back in January the 20th, I believe. Yep, January the 20th. Ran up, made an H pattern. and you came back down. Now, the gap that was important but got filled was the gap on the 5th of February to the 8th of February. So over the weekend, there was a gap down. And then what happened is all of a sudden, you got the gap that I'd be looking at now is the gap, and this really pertains to your question. It's been filled, but it's still a gap of importance. And that's the gap from the 28th of June in the SPY, where it had a high of 203.23. And the very next day, on the 29th, that was the weekend, it gapped up. Oh, no, it was 28th to 20th. It was the next day. The low was 204.72. So I'm going to do this. We'll keep it here, and you'll see. And I'm going to explain to you a couple of things that are going on. I think you've got a great question there, but I'm going to sum it up in just a real quick thing. If you want to hold on, I'd actually like to pursue this a little bit more.
I can definitely hold on. I guess I'm still confused on the theory behind filling gaps, but
okay. Well, I'm going to tell you about it.
It is what it is, right?
Treat it as an icon, just something that is a visual that you might come back to. I'll talk about it when we get back. We'll be back, folks. Dow's up 33.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're going to go right back to Ben, talk about the gaps in a moment. I just wanted to show you, this is the 10-minute SPY, the 10-minute E-mini. Made that peak D. Now the big thing is 2095, the 9-period moving average. If it takes that out, look for the peak C high at 2091 as a key support level if there's further pullback. All right, so I'm going to make it real simple, that if you're at a potential extremity, Ben, then that gap does not necessarily have to be filled. I'm looking at this, and to me, the gap is absolutely unimportant. What is important is the 203.95 level of the 200 period exponential moving average in the SPY. So that I wouldn't even expect that if there was a huge pullback coming up in the next few days, I don't think there will be, but if there is, that you will not fill the gap, you'll go halfway into the gap. That would be key support. So let me now I'm going to go to the second part of the question, which is probably the most important part. Gaps can be filled, but they become, just for me, one more icon that I look at. Is it a previous peak? Is it a previous trough that I'm looking at as support or resistance? Is it a particular time that you've gone there 3 or 4 times and it's now become a very important horizontal line as key support and resistance? So all I'm saying to you is that once you break away from a gap, either up or down, the further away you go, the less important it is. The closer you go, the more important it becomes.
So you don't see this gap back on 216 as telling you that at some point, I don't care if it's tomorrow or over the next 10 years, that has to be filled because it's a gap. It may never get filled.
No, no. It only becomes important when you're getting very close to it. It doesn't. It only has to get, because gravity will eventually see many of the indices or stocks eventually come down to test major support levels over a period of 5 or 10 years. Yeah, that's going to be an obvious thing. But I would say, no, you can keep it in mind. But I've looked at charts. I've looked at thousands of charts with gaps from very important turning points. And maybe you got a test in an H pattern, but that was going to happen regardless of the gap. So I don't have anything. You know what? I'll try to find some history. I'll look at Bukowski. I'll look at some of the people that write for Stocks and Commodities magazines. I'll try to find out if I can, maybe if I have a chance, I think I will have a chance to go online and I'll see what I can find about gaps that is different to what I'm thinking. I say it's simple. Yeah. The further away you go from a gap, the less important it is. The closer you get to it, the more important it is. And that's just as simple as I can make it, really. Keep it in mind, but I do not trade on gaps. Let's put it that way.
Okay, well, that really makes a huge statement. And of course, ultimately, I was looking at that because there's a lot of strong resemblance between the stochastics and how they took off and the magnitude. So
to me, that's the most important. The fact is, we had 3 powerful up legs, and those are usually takeoff phases. So I'm looking at this, and I'm saying there's really now a very good chance. Let me show you this chart right now before we go to Jerry waiting patiently over there. Look, we almost tested 18,011 was the high that we broke down a Thursday a week ago. At the close, I said it's a fantastic close. Now we've got this thing, Brexit, to worry about. I hope it doesn't go down, but if it goes down, look what happened. It went powerfully to 17,063. It's 1,000 points, and came back 1,000 points, not in a straight line, because you can see how the speed of the Friday move down 600 points, but almost in a straight line in a V-shaped pattern. We're now getting to some kind of resistance area, but it's only leg. Is that C or B? Oh, this is AB. This should be leg C, not B. This is leg C in the 120-minute Dow chart. So, yeah, that gap at the bottom there, I don't see us going back there unless there's a major crisis, and we'll have a lot of support levels before then. That's the gap down at 17,100s.
Very good.
That helps.
Hey, I chewed up enough of your time. Have a great holiday weekend. Thanks a lot.
You too, and a very good question. I'm still going to keep pondering, but thank you. I hope I answered it for you. Let's go to Jerry in the back bay. Jerry, how are you?
All right. How are you?
I'm well, thank you.
General Electric.
Yeah, my nemesis, General Electric. I've used it so beautifully as an indicator, and I tried it. We missed getting in the other day, just missed it, and it just took off. 1 gap, 2 gap, 3 gap. This is an amazing move for General Electric. I think it's an important move within the context of it being, for me, part of the Dow market leaders, because it's only leg B. It's already peak B in the monthly chart, and it goes to a leg C, and that'll be really positive for both it and the market if it can go above 32.05. So your question, Jerry, is?
Yeah, I've owned this. I bought it at 25, and I'm looking to sell it. And I think you've had a confluence of events which has caused this amazing run. You had a SIFI thing happened 6 months early. They were given approval, and then
Right.
you had they won yesterday they won a lawsuit against UTX on
Oh,
an engine thing.
I didn't see that.
And-
Oh, okay.
And then after the close, they got a $900 million contract from the government.
oh,
So I think
boy.
I think this is like a non-sustainable run, and I'm looking about where to sell it.
Okay, so Jerry, I'm going to make the suggestion that might be a little bit different to what you're thinking right now. I'm going to say to you that yes, it's a confluence of events that have been extremely positive for GE, and GE was so close. If it didn't even have to close, it had to go below 29.06, and then I always said, you know what, I love GE, but I think it's going to need a little more time before it can get back to the 32 area. But what happened this week has really been spectacular, because what it does, I could theoretically call this G/A. I'm going to give it the benefit of the doubt. I should, just in terms of Chapman wave notation. I'm going to put G/A. My preference actually is to go A/G, but I've got to have the letters go in sequence. I like what I'm seeing. That's number one. Number two is the way General Electric has refused to break down on anything that's happened in the market ever since it made that low back. You were already in it, but the low of 27.10 back in, I think it was February. Yep, February, the week of the 12th. Yeah. And then went to a new recovery high at an F. I'm calling it an F for now. I might have to change that to a C if it takes out, in the weekly chart, if it takes out 32.05. I'm probably going to be conservative and say I'm going to call it not a G, but more like a C. All the time saying to myself, that will take the MACD positive in the weekly, and the stochastic still just okay. It's not great in the daily, but the monthly chart actually is really strong. So this is what I'm going to say to you. You've got a 6-point gain. You're looking to, actually you said take it off, not lighten up, but you said,
oh yeah, I want to sell it. Fundamentally, I think it's worth around 31.
Okay, and it is at 31. It's at 31.47. So the fundamentals
that's why I want to sell it, right?
Okay, so here's what I'm going to say. I'm thinking that it's going to get excessive to your price ratio that you're looking at right now. I might be wrong, but this thing has 33. Right? I'm looking at 32.50 to 33 in the monthly chart as the potential for GE coming in July. Yeah. So we've got a break coming up now. If you give me a moment, I'd like to just stretch this out to look at the monthly charts. I want to talk to you about what happened from the 42.15 high down to the $5.73 low, and where it is now, and why I think it might have recycled higher. So if you don't mind holding on, is that right?
Thank you.
We'll be back, folks. Dow's up 30.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. We're looking at GE. GE trading right now at 31.47, down a penny. So this is what I'm looking at here. If I look at the Chapman Wave price projection software, this is an automatic process here. I've got the daily chart says 31.65 to 31.61 is very strong resistance. And today's high, if I can just find it, is, let me just use this chart right here, is 31.63. So on a very short-term basis, I think we're kind of bumping up against it. If I look at the, where is it? The weekly chart, it has 32.26. There's just one line, 31.26, which we've passed, and 32.26 is next. If I look at the monthly, 33.13 to 33.76, 34.20, that's the area of very strong resistance. But when I look at the support levels, I've got 31.40, 31.29. We're close there. This is on the 10-minute chart. I've got nothing on the 120 until you get to 30.57. The monthly chart doesn't have any support until you get to the 25.23 level, and the weekly has 20, let's call it 30 to 28.92. So I have a lot more resistance points, which are really magnet points. So this is what I'm going to suggest to you. I don't think you're going to lose out more than $1 of what you've already got. So the risk is $1, and I'm wrong, but the risk is in relation to the reward is that you could squeeze out at least another 1.5 points, maybe an excessive 2 points, but that allows you to raise the stop all the time, still being in the stock. So here we go. What I'm going to say to you is, if you want to get out, it's at 31.49. The 2 ways that I would recommend. One is right now, 31.49 is a spectacular move. Yes, it could go higher, but you've pretty much got out in your relationship to your theory of using what you think it is worth on a fundamental basis. It means that anything higher is a gift, but you've got what you wanted. So right. You could just take something off now, or I'm going to recommend give it a 30.50 stop. That's 1 point from here on part of the position. And I'll tell you why. Because I see enough. GE is now a leader in the Dow, but my Dow quartet, GE, IBM, MMM, and UTEX have had fabulous moves to the upside. And in fact, there is enough evidence to say that it is showing us that there is some leadership coming into key Dow stocks that could in fact inject further gains into the market over the coming 2-3 weeks. So I want you to be in one of the stocks that is one of the leaders, and that's been GE. So it could hit your fundamental level, but then it could go to a more extreme level, and that says you could raise the stop, have a 1.5 point, you have a 1 point stop on the short term that I'm talking about. But if GE can hold over the next week without taking out Let me see. So it's at 31.50. Let's go all the way down to 30. Yep, I'm quite comfortable with that. At 30.50, if you've got to stop and you're taken out, then you can take out at least part of your position. You could even take out a half. It's fine. I'm just saying my thinking is I would like to have a core position that is still able to go for you to ride it higher. That's really what I'm saying.
So are you thinking the market's going to make a new all-time high now?
I think there are enough signs here. I'm going to do a lot of work over the weekend. I don't want to rush into judgment.
Oh, yeah, this is a really complicated situation, yeah.
Well, actually, I'm going to try to make it as simple as possible, because if I'm looking at the Dow, yesterday, where did it go? Yesterday, you closed, INDU, the weekly chart closed it just missed the 18,011.07 high of last week, the Brexit high. And if it actually overtakes that on Monday or Tuesday, the candle that's formed says there's just a really good chance you're going to go to at least above 18,167. And that once you're in that range, then automatically you've got, my eye would be on that previous all-time high of 18,351. Now, how does that fail? We've had a single leg to the downside, I called it a Chapman wave single leg A. It was really a C to the downside. To the upside, we've got a gray single leg A. Why is it gray? Because it hasn't gone above 18,011.07. If it goes above that, I'm going to color it in blue to say this is active. This is really a very strong leg A. And even if you had a very sharp pullback down from the Dow 18,000 level to 17,000, let's call it 600. That's a pretty big move, 400 points.
Yeah.
And it finds stability. That would give you a one-to-one relationship that says you should be able to go and retest the all-time high. The only way that I can see this starting to fail, if the VIX index, which has done everything we talk about, there's the Eiffel Tower, that was a question I had, straight up, straight down, it's at 1499. And that says to me that unless the volatility, I don't know what's going to get it there, but unless the volatility can go to the 20.30 to 21.50 level in the next week and a half, anything can happen, but I just don't know what's going to get it there. If it does that, this rally is a fake rally and we're going to do a lot of testing. But in the meantime, I'm looking at this and I'm saying, gosh, all the things that I'm looking at here are actively moving. Look at, I'm going to run this quickly. GE, beautiful move. IBM, beautiful retracement move. The weekly is starting to improve. Monthly is starting to improve. Triple M, MMM, always a leader, and it's leading again. It broke out. It's at an all-time high as we speak. Oh, I can't believe we didn't buy that. UTX and United Technologies is always a laggard, and it's acting pretty well. Not great, but pretty well. So, and this has to be called leg A in the daily chart, because it went under the previous move that started the buy signal, 97.94 back on the 19th of May, went to a peak E, sharp pullback from 102.86, and now it's gone to a new recovery high. New recovery high means you took out the previous low. This has to start a new move. I have no choice here again but to call it a leg A. This is a blue leg A. So I just don't want you to get out of something you got in so beautifully. So if you want to take a little profit, I have no problem at all. My problem is that I think that GE is showing us signs of strength, regardless of how it came about. The price movement is acting so, it's superb actually, and it's been leading, and I like that. I really want leadership in the old names. That's the move that I'm expecting to take the Dow to all-time highs if it's going to do that. And it needs to do that probably in July. I hope that helps you, Jerry.
Yeah, that employment report next Friday is going to be a really critical thing about the attitude towards interest rates and maybe the market. Thanks a lot.
Right. Thank you very much. Have a great weekend.
You too.
Thank you very much. That's Jerry in the Back Bay, Boston, and Dow's up 36, S&P's up 5. So I had a question about the Eiffel Tower. Let me just go back to the VIX index. And what was the actual question? So let's see. Find the right computer. Oh, there we are. So I ran the talking about the 220, following up on my discussion on my speed as a youth. And then the question is, Oh, that wasn't the question. That was the wrong one. So the question somewhere was about there it is, Greg. So Greg asked about the Eiffel Tower. I'll talk about that when we get back. I'll talk about what I'm anticipating, and I'm going to be sending out a lot of charts to my subscribers to my opening call over the weekend. What is really looking good, what we need to do just to be cautious for the very short term, and is there a potential starting Tuesday, Wednesday of adding to the long positions? I'll be back straight after this. Basil Chapman, Tiger Positions Hour.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Just in the remaining couple of minutes here, let me do this. A question in the den about the Nikkei. The Nikkei, I've got, should I short it, was a question. And I'm just saying, yeah, it looks very weak. It does have the weekly chart. It has the Chapman wave H pattern, which says, whoa, be careful, because if it's a successful test, you could have a very quick bounce. But if you're not able to trade on Monday and it's a holiday, I'm just going to say, you know what, for risk reward, give up a little bit of a gain by going short if it does drop. Is at 15,680 and minus 140 on the this is the futures contract, continuous contract, I should say. Just I'd be careful. So because if it does succeed and suddenly all of it, you're looking at it at 5 instead of 15,680, it has a bounce and goes to the 16,000 level. 15. Sorry, I didn't mean that. I mean 15,920 level. You're looking at a good chance of it bouncing up to 16,059, the 200-period exponential moving average. The weekly chart, monthly chart really looks terrible. So the answer is yes, if you're able to cover it Sunday night into Monday. But if you're only going to trade again Tuesday, definitely not. Okay? Now, the next thing is the Eiffel Tower. Let me just explain what it does. It looks like an A. an uppercase A. In other words, I'm going to type it in right here. I always do this, and then I do it in red, nice and big, and it's just straight up and straight down. Just real simple. There's nothing. There's no drama to the identification. It's just straight up and straight down. And that went, well, there was a little drama over there, but it went to a peak F at 2672, the VIX index, and it's come down. Now, the big thing is from this level here, about 80% decline, that says it should retest the bottom in the 12s, 1250 area. But this is also the area you've got to be careful because there could be a bounce, and that bounce is going to be very important because after going straight up, coming down, if there is a bounce and it goes to a very important left side peak, or a moving average, in this case, the 9-period moving average of 18.04, this market is coming down sharply. So, and you can see the weekly chart there's that C, looks like a C minus. I think that the VIX is telling us there is buying pressure, and that buying pressure should remain next week at least. Okay, that was that. So Ford, yeah, Ford's having a nice day today. It's pulled back from the high. It's really tough to trade this. We tried it. I don't know what to say. I would like to just be able to hold these. I don't want to take a big loss. In other words, I don't want to go from 12.79 to 13 something. I just don't want to do that. At the same time, I'm looking and I'm saying it's time for these General Motors here. Yeah, it's just earnings not good. It's up a little bit. They're going to have a move. I just don't know when. If you can put it away, if you can, in other words, Bob, if you want to buy Ford, just buy it, a small position, tuck it away and say, I know that this could pull back. I don't care because my target is the $14 level, the 200-period moving average in the weekly. And the moment it takes out $14.50, the monthly chart improves and it starts to go higher. That's the only way I could do this. Really, you need a wide stop, and you just need to buy and hold. That's the way I'm looking at it. So the IYR, EXR, what was that again? EXR. That's extract. Oh, that's extra space storage. Extra space storage is, in fact, let's see. Oh, it's acting very well. I don't want to do it on the fly. I'm just saying that it's at 90.93. If you do own it, just make sure that you've got to stop around about 88.58. It is looking quite good. Monthly, the weekly is improving. Monthly is spectacular. Just if you haven't been in it, it's kind of tough to buy it so close to all-time highs. So I want you to do that. I'm also going to do this right now. I'm going to say, hey, have a wonderful, wonderful long weekend and a happy 4th of July. I look forward to seeing you all on Tuesday. Check out my opening call. I have a lot of charts coming up over the weekend. We've had some nice gains in the ones that are moving up. And we do have a couple of shorts. We'll see what's going on over the weekend. I'm almost about to beat my engineer is going to be so pleased with me. I won't be talking through the break. There it is. Stay tuned for all the great shows still coming up today. And I will see you on Tuesday. Have a wonderful weekend.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.